we are prize. The Nigerian economy is a prize taker. We're not a prize giver, and so everything that happens at the global arena affects us directly or indirectly. So these are some of the highlights of our discussion this night, to see how those events shaping the global arena affects the domestic economy like ours. Once again, I welcome you to this economic discourse of Cowry Assets, themed Nigeria in 2026. Will politics trump economic reforms? Will politics trump economic reforms? For those of us joining online, you are also welcomed to the discourse. We're not omitting you. We're appreciating you for being a partner in progress to Cowry Assets Management Limited. So once again, I welcome everybody to this very important discourse. Both of us here physically present and online. You are all welcome. You are all welcome. Thank you. Thank you for coming. Thank you for being a good friend. Thank you for being a good associate of Cowry Assets Nigerian Limited. Occasion. Like I said earlier, I will be the moderator to this event. Nigeria in 2026. Will politics trump economic reforms? Will politics trump economic reforms? You are welcome. Once again, we want to commence fully about the program. Good evening, ladies and gentlemen. I have introduced my name before, and I may also do the reintroduction. Professor Christopher Kali is my name, a professor of economics and the head special project unit of Cowry Assets. Once again, it is my pleasure, my great pleasure, to welcome all of us to this very important program, the Cowry Quarterly Economic Discourse 2026. Now, the aim of this discourse is to x-ray, to present an overview, a simplified overview of the Nigerian economy in 2025. Now, looking at the global dynamics that shaped the global world, which transformed or which affected most developing economies of the world, including the Nigerian economy. So, at the end of this discourse tonight, we're going to see how those global dynamics, all those geopolitics tensions, all those trade tensions of the global world affects the domestic economies like Nigeria. Then at the end of the day, we make a forecast based on those trends that shaped the global arena down to the domestic economy in 2025. So Cowry will make a forecast of what we expect as investors, what we expect as policymakers, what we expect as stakeholders in the Nigerian economy come 2026. And to achieve this purpose, we have segmented our discussion tonight in two major ways. Number one, there will be a key presentation. And number two, there will be a panel session. There will be a panel session at the end of the discourse. So this is how we'll go to achieve our objectives. Okay, so without wasting time, I just want to appeal to us respectfully so that we can commence and beat the time. May we please rise so that we can take the national anthem as a sign, as a symbol of our respect to our fatherland, Nigeria. The media, please, you can get it.
and justice reign, in peace or battle honored, and this we count as gain. To hang on to our children a banner without stain. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty Nigeria may be blessed.
Anytime we sing the national anthem, it gives us sense of belonging. And the only way we can honor Nigeria as a great country is to sing the national anthem. No matter what is going on, Nigeria is a great country. And it's all of us that will make it great. Thank you once again. You are all welcome to Cowry Quarterly Economic Discourse with the title or with the theme, Nigeria in 2026. Will politics trump economic reforms? Like I said earlier, at the end of this discourse, we'll be highly enriched. In all dimensions will be highly enriched. So, to go further in our program tonight, I want to respectfully invite our Executive Director, Mr. Charles Sani, to present his Cowry welcome address to these distinguished ladies and gentlemen. Thank you, Mr. Sani.
Good evening, distinguished guests, esteemed speakers, partners, clients, colleagues, ladies and gentlemen. I sincerely, on behalf of the board, management, and staff of the Cowry Group, want to, with all pleasure, warmly welcome you to the Cowry Quarterly Economic Discourse. Thank you for choosing to be part of this important conversation. Whether you are joining us here physically at the Capital Club or virtually from wherever you are, your presence speaks volumes about your commitment to staying ahead in a rapidly changing economic environment. The Cowry Quarterly Economic Discourse was deliberately created to serve a clear purpose to provide clarity in times of uncertainty, context in times of change, and directions in times of decision making, like Professor Kalu had earlier alluded to. Indeed, we recognize that today's Nigerian economy sits at a critical intersection where policy reforms, political dynamics, capital markets, and investor confidence are deeply intertwined. In moments like this, silence is indeed costly. Speculation is dangerous. An informed dialogue becomes essential as we navigate the economic terrain and the global economic climate. And that is why Cowry convenes this platform not as a ceremonial event, but as a thought leadership forum where ideas are tested, policies are integrated, and practical insights are shared. Therefore, our objective is threefold. First, to decode complex economic and policy developments, especially those that directly affect individuals, businesses, and investors. Second, to bring credible voices to the table. Policymakers, market leaders, and private sector experts who are not only observers of change but active participants in shaping the outcomes, which is why we are blessed to have the enriched human capital component of the panel list for discussion this evening. And third, to equip our audience with perspective, the kind that supports better decisions, smarter capital allocation, and sustainable wealth creation. This edition's theme, Nigeria in 2026, Will Politics Trump Economic Reforms, could not be more timely. Even as we have seen ahead by way of insight by Mr. President, who is saying that by March 31st, 2026, he's going to end multiple budget. As Nigeria navigates sweeping tax reforms, heightened political activity, and evolving market realities, the central question is no longer whether reforms are necessary, but whether they will be sustained, protected, and translated into real economic progress. Tonight, we are privileged to host a distinguished panel of speakers whose insights span physical policy, capital markets, private enterprise, and investment strategy. Their perspective will undoubtedly help us examine not just what is happening, but what it means, and more importantly, what comes next. At Cowry, we believe that strong institutions help build strong economies, and strong economies are shaped by informed conversations, which is why we are here tonight. This discourse is part of our broader commitment to leading relevant conversations in finance and economics, conversations that ultimately help transform dreams into reality through the power of wealth creation. Once again, thank you for being here. Thank you for engaging, and thank you for trusting Cowry as your partner in navigating the future. I wish us all an insightful and impactful discourse. Thank you, and please do enjoy the session. Thank you.
Sorry, one more round of applause for him, please. Thank you, our ED, Mr. Charles Sani. He has outlined the purpose, the objectives, the relevance, and the significance of this discourse. Once again, thank you very much. We want to welcome all our attendees, participants to today's event. Those of us that are physically present and those of us that are online, you are all welcome. At this juncture, we want to introduce some of our guests and dignitaries as a way of giving them honors. Now, we'll start with our directors of Cowry Assets Management Limited. Those of them that are physically present include Dr. Bayo Olugbemi, Mr. Mike Chuku, you are welcome, sir. Mrs. Fadeke Olugbemi, you are welcome. Those of our directors attending online include Dr. Ebel Oji Sunday, Josiah Samuel, our own dear Professor Uche Uwaleke, and Professor Francis Ezono. You are all welcome. We appreciate you for making your time to attend this event online. Then we appreciate our shareholders who are physically present, including Chief Obina Nyawu and Sylvanus Eneche. Others are Chief Ezelipe Obueme. You are welcome, sir. We appreciate you. Then we also appreciate our friend, our top friend, Rosfai Oseni. What are you, sir? You are welcome. You are welcome. We thank you. We thank you. We thank you. And then we want to appreciate all of you. You are so important to Cowry Asset Management Limited. Without you, we are nowhere. But with you, we are somewhere. So we appreciate you. We appreciate you. We appreciate you. Most significantly, we want to appreciate and welcome and introduce our keynote speakers. In no particular order, some I've seen most respected of them here, including Alaji Dr. Umaru Kwarainga. You are welcome, sir. You are welcome. You are welcome. You are welcome, sir. Dr. Chinyere Alomona, is she around? Okay. Oh, we are welcome. You are welcome. We are welcome. What the men can do, the women can do better. Give her a round of applause, please. Give her a round of applause. Then, do we have the chief reformer of the time and season here? Is he around? Our chief reformer. Everybody in Nigeria has that chief reformer in his or her mouth. Mr. Taiwo Oyedele. You are welcome, sir. And most significantly, the man that is dictating the pace, the man that we see as our mentor, the man that will take us, carry us along in this journey to greatness, Mr. Johnson Chukwu. You're welcome, sir. You're welcome, sir. I appreciate all of you. I appreciate all of you. Without much ado, we want to go straight into this program with a keynote presentation. Like I said earlier, we have two segments to this program. Number one segment is characterized by a keynote presentation. Then the number two segment is of panel section. Feel free, like I said earlier, relax. You will enjoy your season. And after enjoying your season, we will still enjoy, because I know Nigeria will beat Morocco. I know for sure that Nigeria will beat Morocco. So we want to specially welcome the man that dictates the pace. I call him my GMD. We call him our GMD. Mr. Johnson Chukwu, the Group Managing Director and CEO, Cowry Asset Management Limited, to make his presentation. A round of applause, please, as he makes his way to the podium.
Good evening, distinguished guests. Good evening, distinguished panelists. Good evening, our directors. Good evening, our shareholders. Good evening, our wonderful customers. Good evening, our friends. You're welcome. I was quite happy to hear my colleague predict that Nigeria will beat Morocco today. So can we give me a round of applause? Okay, so I will be speaking probably because of the match and the fact that I want us to have a lot of time to discuss with the panelists. Tai will just confirm to me he's almost here, so be rest assured our wonderful team of panelists are all here. Once again, we appreciate you for accepting to share your thoughts and your ideas with us, and for making our time to be here. So I will speak briefly on Nigeria 2026. Will politics trump over reforms? I don't know whether we're in a position to share that. Media? Okay, good. So if you look at that, probably I should come out slightly from here so that we can be a little bit interactive. So this year is going to be a year that will be dominated by politics, not just at the local environment, but at the international, global environment. And if you look at what's going on today, you see 2026, we termed it as a predictable year of unpredictability. A predictable year of unpredictability. So you can actually predict that this year is going to be unpredictable. The anything you can predict is the fact that the year is going to be unpredictable. So, and it's all about politics, local and global. So we see politics dominating whatever we're going to do today. We move on to the next one. So I'm going to take about 15-20 minutes so that we can have the distinguished speakers. The Global Economic Review power equation. You can see Mr. Donald Trump, as powerful as he is, well, every other person is just looking up to him. So the power equation seems to now be in fact, we have gotten to an era where might is right. And there's no doubt about the fact that the man, Mr. Donald Trump, wants to exert as much power of the American force as it is. I mean, on 25th of December, he came and bombed some parts of this country. On 2nd of January, he went and picked the president of a sovereign country. In fact, yesterday, he tweeted on his truth that he is now acting president of Venezuela. So if you look at what's going on now, okay, so if you look at the global economic environment, you realize that in 2025, because of the policy pronouncements, measures taken by the US government, the global economy went into a slowdown, drastic slowdown. And that slowdown affected almost all the regions other than maybe Sub-Saharan Africa. If you look at the regions, Sub-Saharan Africa is among the few regions that showed improved performance or reasonable stable performance, and it's actually projected to actually grow further at 4.4% this year. Compared to the Eurozone is projected to grow at 1.1%. And if you look at the emerging market and developing economies, they're expected to grow at 4%, mostly driven by growth in India and growth in sub-Saharan African countries. You look at advanced economies are expected to grow at just about 1.6% this year, and the world economy is expected to grow at 3.1%, driven mostly by the sub-Saharan African economies. But if you go further, you realize that, next slide. If you look at this slide, you realize that virtually only the US is growing. Look at the growth in 2023, growth in 2024, and growth in third quarter 2025. And you realize that the US grew at about the same level in 2023 and 2024, and grew at the third quarter of this last year at 4.3%. Look at China growth. You can see Chinese growth is tapering at a very fast rate, from a growth of 5.4% in 2023 to 4.98% in 2024. In the third quarter of last year, it dropped to only 1.1%. And this is very critical for us as an economy because China is our largest import market. We import almost a third of our import. Our imports come from China. So if China slows down, it has ramifications on the Nigerian economy. Then you look at India. India is one of those that was growing very fast. And this we are all driven by policy pronouncements of Mr. Donald Trump, compelling companies to reissue back to the US, compelling companies not to do business with these faster growing economies. You can see India's growth has dropped from a high of 9.1% in 2023 to just 2%. And you see Japan is still in negative. Yes, there's an improvement in negative position to negative or 0.6%. You see United Kingdom at a growth of 0.1%. You look at France, growth of 0.5%. Italy, growth of 0.1%. Russia's growth had dropped to 0.6%. And Canada is at 0.6%. But if you just look at this slide, if they go back to that slide, we see of all the developed economies, US is only one that is growing. Which is why we said, now we're talking about his might, right? And Mr. Donald Trump has no apologies for throwing the US weight around. If you go to this slide, you see even countries like Brazil. Next slide. If you look at countries like Brazil and other emerging economies, can you move the slide? Okay, fine. You can see Brazil growth has also dropped to 0.1%. Spain, 0.6%. Mexico, negative of 0.3%. And if you look at these economies, Brazil, Mexico, Turkey, Indonesia, these are the countries that are driving emerging economies growth. These are the countries that had taken on part of the demand for offshore production from China. Mexico was doing quite well, and unfortunately, the U.S. government imposed severe and very punitive trade policy penalties or tariff on Mexico. So you realize that because U.S. is the largest consumer market in the world, U.S. compelling companies to come back to the U.S. and putting tariff on other economies have constrained production in most economies and led to a drastic slowdown in global economic growth. And what does this portend for us? It also says that, look, input material cost or cost of input will slow down. Demand for input will slow down, including demand for oil. Because if the countries that are producing with this crude and other input materials are slowing down to this extent, which all of the economies are slowing down, then what that means is that we will see in the immediate future demand for input, demand for raw materials slow down drastically. But interestingly, the African economies seem to have weathered it. And our question is that weak global economic integration looks like an advantage to African economies because we're not producing finished goods. We're not exporting finished goods to the US. So, and the US did not impose tariff on import of oil. So the sub-Saharan African economies seem to be weathering it, or better than the countries who are exporting finished goods to the US. So if you can see, Nigeria's growth rate has increased from 3.38% in 2024 to in the last quarter of the third quarter of this last year, it was at 3.98%. That was actually a slight decline from about 4.23% it was the second quarter. If you look at Egypt, you can see strong growth at 4.77% third quarter of last year. South Africa has actually improved, remained at about 0.5%. South Africa, why? Because South Africa is their largest export market is US. So any country that is exporting to US has suffered severe decline in their economic activities. But for most sub-Saharan African economies, they hardly export anything to the US other than crude and raw materials. Look at growth in Algeria, look at growth in Morocco, look at growth in Kenya. Kenya's growth obviously was affected because Kenya also exports to the US, particularly tea and flour. So you can see Ghana's growth is as strong as 5.5%. So what this means is that the more you are decoupled from the global economy, the safer you seem to be from the US policies. Next. So if you look at this, you can see that, just like what I said earlier, you are seeing slowdown in almost all the regions. You slow down in advanced economies other than US. You slow down in emerging markets and developing economies other than sub-Saharan African economies. You have a slowdown in the Eurozone. Virtually all the Euro economies are seeing similar slowdown. But we're also seeing a slowdown in inflation. Of course, one of the things we know about inflation is if demand is weak, then you cannot have a high inflation rate unless you're talking about stagflation. So we've seen the monetary policies around the globe. Most central banks have actually adopted tight monetary policies over time. Even the U.S. Federal Reserve is just recently they started loosening. So that the impact of that tight monetary policy, coupled with the fact that demand is weak, has led to a reduction in inflation rate globally. But that reduction in inflation rate has not translated to improved demand. Most central banks have actually cut rates to stimulate local demand. But unfortunately, the most advanced economies have a production capacity that is targeted at the US market. And with US demand slowing down, they find out that they really cannot continue to grow their economic activities locally. So this is what the central bank have done. Most central banks, if you look at this, you see almost all the central banks globally have cut interest rates. Cut interest rate last year, including the U.S. Of course, one of the issues that the U.S. President have with the Federal Reserve Chairman is that he's not cutting fast enough to bring down interest rate and stimulate further production. But the reality is that we've seen a reduction in inflation rate, we've seen a reduction in benchmark rate, but it has not translated, which is the natural thing that should have happened. It should have translated to an increase in consumption. We're not seeing an increase in consumption, and if you don't have an increase in consumption, you're not going to see an increase in production because it's demand that will drive production. Next. So, coming home, Nigerian economy in 2025, improving macros but weak micro. The government macroeconomic variables are showing significant improvement, and we're going to go to that. So the government is happy. The government revenue amount that was shared by the three tiers of government, as the last time we tracked it, was about over 14 trillion naira as at September, as at November last year. And we've seen at the subnational level, we've seen impact of increased revenue. But look at the macros. GDP figure. 9 months average for last year, 3.79%, and improvement over 3.38%. So we are seeing a sustained and increasing level of GDP growth rate. Inflation rate, December 2024 was 34.8%. 2024, it averaged at 3.18%. 2025, it averaged 21%. And as at the last published inflation figure in November, it was 14.45%. You see an improvement, material improvement in inflation rate. You look at your balance of trade. Your balance of trade for the first 9 months of last year was 19.33 trillion. The entire 2024, it was 16.8 trillion. So you see a growth in your balance of trade, positive balance of trade. If you look at your foreign exchange, as at the end of last year, at 2024, average exchange rate closed at 1538, 1,538 naira to a dollar. December 2025, it closed at 1,335 naira to a dollar, and it was relatively stable last year. In fact, as at now, it had gone below that. I think it's about 1,420 naira or so, or 22 naira. So, and then if you look at your reserve, the reserve grew from about 40.88 billion at the end of 2024 to 45.5 billion. And your crude production averaged about 1.45 million barrels a day last year compared to 1.34 million barrels a day. These are indications of positive macros. These variables, can we move forward? Just next slide. So these are just a summary of what I had presented earlier. We've seen, but when it comes to federal government revenue, we have a challenge. And despite the improvement in federally collected revenue, good thing Mr. Taiwo Edele has worked in, so I'm sure you're going to dwell a lot more on how they want to increase that. And I also want to recognize my president, the president of Chartered Institute of Bankers of Nigeria, Prof. is here. So you realize that despite the increase in government revenue, last year, 9 months, total expenditure was 33 trillion against 55 trillion that was budgeted. Total revenue was only 18.2 trillion at the federal government level against 40.9 trillion. Total deficit was about 14.8 trillion against a total budget for the year of about 14.1 trillion. And then you have planned borrowing was only 14.1 trillion, but they had borrowed 19.1 trillion the first 9 months. But the greatest challenge is that when you talk to those in federal ministries, agencies, and departments, they tell you there was no capital release last year. So everything we're talking of spending here was all recurrent. So there was no capital release, which means the budget was barely implemented, as we have impact on the economy. But let's just go to the next, because like I said, we want to go through this. So this shows you the evolution of our inflation rate. You can see inflation rate started at, like I said, 34.8%. In December 2024, it had dropped to 14.45%. These are positive, these are green shoots. You can see your GDP growth rate over the past couple of quarters. Like I said earlier, second quarter was 4.23%, and third quarter was 3.98%. So we've seen if GDP growth remaining above 3%, 3.5% for the past couple of quarters. Next. But the challenge we have is that the households seem to have a different story. So ordinarily, improving macros should lead to lower cost of goods and services. It should lead to, when you have lower cost of goods and services, it means your purchasing power, the purchasing power of your income will improve. If your purchasing power of your income improves, it simply means your standard of living will improve. So if we are seeing strong positive macros, then we should also see that trickle down to individual households. But we're seeing an increasing level of poverty among the households. This is a report from the World Bank. The World Bank says that the percentage of Nigerians who are poor will get to increase further to about 62% this year and drop to 60% next year. You can see a steady rise even in 2025, that in spite of the improvements in macros. Then if you look at the numbers, the World Bank report, Nigerian Development Report, says that by the end of this year, 141 million Nigerians will be living in abject poverty. These are contrary to the figures that the macros are telling us. So the question is that, how do we translate the positive macros into the micro, so that households will begin to enjoy the benefit of lower inflation rates, increasing reserve, increasing government revenue, and what have you? That is a challenge we are still dealing with. Next. So if we're coming to look at the domestic market, I'm going to just quickly run through this and we move to the discussion level. We've seen the Nigerian Exchange, good at in our chairman, group chairman of Nigerian Exchange is here. I want to discuss Dr. Alaji Omari Kwarianga. So the market reported 51.19% last year. That is more than 50% capital appreciation on a basket of all the stocks. What that means that there are sectors that actually perform that. Let's just quickly go to that. Yeah, if you look at this sector, you can see consumer goods gained 129%. You can see insurance sector, 65%. NGS Industrial Index, 58.9%. What that means is that if you have invested in the capital market, you had actually outperformed the inflation rate. We said average inflation is 21%, 21.03%. So if you have invested in a basket of stock and you made 51.19%, you had made positive return on your investment. Next. So these are the major top gainers. You can see NCR gained 1,111%. NSAIL gained 717%. Micure 401%. Guinness 297%. STI 182%. Aluminium extrusion Industry, 175%. Ikeja Hotels, 133%. ICO, 126%. UAC, 122%. Mutual Benefit, 121%. So these are to show you that these are real. People are invested. If you put in 100,000 in any of these stocks, you came out with 200,000. Let's quickly run. So these are the laggards. Living Trust lost 53%, John Holt 36%, Legend 34%, Livestock Fees 34%, Eternal 33%, Oando 27.3%, Union Dye Consult 25%, Curtis 24%, VFD 23%, and NNFM 21.9%. Now, I had said earlier that the Nigerian market gained 51.19%. But this is tell us that, look, the emerging African markets did so well last year. So that, because somebody had actually said passingly that the Nigerian market was the best performing in the whole of the world. So this is tell us that that is not exactly correct. If you look at this slide, you can see Ghana delivers 79.2%. So Ghana outperformed the Nigerian market. Look at Egypt. Egypt did 40.1%. We did better than Egypt. So clearly, if you look at this, it's only Zambia, Malawi had the highest capital gain, about 247%. Followed by Ghana at 79.27% and Zambia at 67.86%. So it simply means Nigeria came fourth in terms of ranking when it comes to market performance, when it came to market performance last year. Next. So if you look at the domestic fixed income market, the market followed the trend in inflation rate. We saw the central bank moderate the yield, the price it was paying for treasury bills, and every other instrument followed that trend. If you look at even the yield curve, you see we had the inverted yield curve last year, where longer tenured instruments, next slide, were giving lower yield because people expect that rates will drop further in the coming years. So if you look at this, you can see longer dated bonds, 30-year bonds, were giving lower yield than instruments that had 1 year to maturity. What that says is that there is confidence that inflation rate will moderate further, and therefore interest rate will drop further. So investors are ready to lock in on longer term instruments at even lower yield than they will lock in on shorter day instruments, so that they will, over time, they will weather the reinvestment risk. So let's quickly go to. So also in the Eurobond market, we also see an improvement in Nigeria's sovereign risk rating. So where foreign investors and local investors are ready to take Nigerian foreign currency risk at lower yield. Of course, we know the government came to the market and raised Eurobond at 9%, but we've seen consistent decline in the yield, which is the price investors are asking Nigeria to pay to buy our instruments. So what that means that the improvement in the reserve, the stability in exchange rate, gave investors confidence to invest more in Nigerian debt instruments, including foreign currency denominated instruments. Let's go to the next. I'm trying to rush through this so that we enjoy the benefits of our discussants. So what I had said earlier applies to the treasury bills market. We saw treasury bills start about 18, 19, 20%, but eventually tap out about 15, 16%. Although at the last auction last week, it moved back to 18% because I think the central bank is trying to front load the risk inherent in the current fiscal year. I'll talk about that as I move on to the next slides. Gazing into 2026, what do you see in Nigeria? Starting from the global environment, the exogenous factors, the factors outside our control, that's what you call the exogenous factors. Those ones that are not within the control of policymakers in the country. One, President Donald Trump's political rhetorics. On a daily basis, On the daily basis, Mr. Donald Trump, once he wakes up on the right side of he will come up with something that will jar the whole world. So you look at other factors will be crude price movement. Crude prices. We expect, of course, we know what has happened in the recent past. He just yesterday or this week, he said he's going to blockade, he's going to impose 25% duty on any country that trades with Iran. So it simply means one president in the world has become a world president. So he tells everybody what to do to trade with. And then, so in effect, he's blockading Iranian oil. And oil price has gone back to $65, a level he had not traded for almost a year. So then he also said he's now the acting president of Venezuela. And he said that US will get Venezuelan oil and wants to restrain other countries from getting Venezuelan oil. So there is, in fact, when he took over, when he extracted the president of Venezuela, oil prices crashed to below $60. But the action he took this week has led to oil price going up again. So oil price is a factor that will determine how our economy plays. Remember that Venezuela has the highest reserve of crude in the world. And the US government is ready to grant resources to oil companies to go back to Venezuela. So if there is sudden improvement in crude production in Venezuela, the implication of crude prices will trade very low. In fact, there is already speculation that crude prices will trade in the region of $50, $52 because of Venezuela oil coming back. Remember, Venezuela is just producing about 1.something million barrels. A country that used to produce 4 million barrels a day. The other factor is China's economic condition. China is going through a property sector crisis in addition to low demand for exports. And we are seeing a slowdown in Chinese economic growth rate to almost an inconsequential level, a level they've not experienced for decades. How that the economy will react to it is still unknown. So there are concerns that if there's no stimulus, China could be a challenge. Remember, we almost imported everything from China. So whatever affects 30% of your import market will certainly affect you. Then, how foreign portfolio investors view or perceive Nigeria's sovereign risk in the pre-election year is a very critical factor, because foreign portfolio investment is part of the factor that have stabilized the exchange rate. And the central bank has been very, very creative in the use of interest rates, offer of treasury bills, OMO instruments to stimulate or to stabilize the exchange rate. So if, as we approach the election year, foreign portfolio investors begin to perceive higher sovereign risk on the country and slow down capital importation, then it could have direct effect on the exchange rate. Anything that affects the exchange rate affects the inflation rate. Then let's look at those factors. Okay, let's just to re-emphasize what Mr. Trump is doing. We call this VUCA Pro Max. What a fortnight. Today is 14th. Starting from this year, January 3rd, U.S. forces have captured Venezuelan President Nicolas Maduro and his wife and flew them to New York, and they are subjected to trial. The impact had a direct impact on, you can see the impact immediately. Crude price, Brent dropped to $59. WTI, West Texas Intermediate, dropped to $55.9. On January 6th, of course, they took them to court. January 12th, Mr. President of the world says he's going to take Greenland. In fact, one of my colleagues came to me and said that, did I see how the European Union's, the Western countries are reacting? They say, if you come and take one of us, then all military treaties, all military, all US command would no longer be entertained. So we're going to go into another world where there's going to be an arms race, because the Western countries are not going to leave themselves undefended. So once they push back, if the US continues with the drive to take Greenland, the Western countries are likely going to expel US forces from their territories. And if that happens, the Western countries will divert their budgetary allocations to military hardware or armament. And the world will change further. January 11, Mr. President said they're going to prosecute Jeremy Powell. And the market went into crisis. All foreign currency debt instruments lost value. Gold tested a new level because there was a flight to safety. People were selling securities to buy gold. All these things happened in just 2 weeks. And the same 12th, he announced that any country in the world that trades with Iran, he will impose 25% duty on them. So you wake up and then somebody tells you can no longer trade with your trading partner, even if it's your neighbor or your brother. That is where we are today. So the implication is that we're living in a very volatile, very uncertain, very complex, and very ambiguous society. And Mr. Trump had moved it to a pro-mass level. Then what are those things that are within us that will determine where the economy gets to in the current year? One is the one that is chaired by Mr. Taiwo. Tax reform implementation. I'm sure I'm not going to talk much about this so that we'll give him the free hand to speak about it. Then, insecurity and other social disruptions. We know some young men were arrested in Edo State. I think they've been released today. In fact, if you have been following the news, I have tried to not to follow the news because when you wake up in the morning and finish reading the newspaper, you become depressed. I saw in the newspaper that people are migrating away from Sokoto State to Niger Republic, running away from insecurity. I don't know whether any of us saw that. So that will be a major play because level of insecurity will affect level of food production. Level of food production will affect inflation. Inflation will affect household standard of living. Then the concerns about pushback on reform policies for political exigencies. We are in a pre-election year. The government needs to have a very strong backbone to resist a pushback by political interests on some of the reforms, particularly those that are hot in the short term, even if they have long-term benefit. And that factor we have to watch out. The government plans to spend within the next 12 months over 100 trillion naira. Why am I talking over 100 trillion naira? The government has, like I said, they did not spend capital budget of last year. They came out in December to have a revised, harmonized budget, which they said is to harmonize the three budgets we are running concurrently. And that budget will run to the end of March. And that budget has about 45 trillion naira that will be spent before the end of March. Then you have another 50-something trillion that will be spent between April and December. If you pump into this economy about 100 trillion naira, you're going to have a liquidity surface. The implication of that, you're going to have higher inflation rate because it's not going to be backed by local production. So the key thing we need to ask is that the pushback. And if you look at this slide, the question I ask, does the money really predict the day? Recent policy pushbacks. The government had actually proposed a 0.5% cybersecurity levy in February last year, 2024. There was a pushback, they stopped it. May, it revised the minimum wage requirement for tertiary institutions. There was pushback, a backed out. The expatriate levy was introduced in July, was a pushback, a back down. In June 2025, the government came up with a 5% fuel surcharge. No, it was actually import surcharge, a back down. And then, around November, the government announced that there will be a 15% fuel import duty on all imported fuel. It also backed down. So, given that all this is as a result of pushback, the question that's agitating our mind is that would government be able to stand the pressures on the tax reform law, given the that we are just at the edge of an election year? Next. This is our look for the year. We think GDP will be around 4.1%. Inflation should average about 17.8%. We think Naira, all things being equal, should average about 1,231 Naira to a dollar. Interest rate will be about 25.5% because of the liquidity suffix, we think. So the central bank will not easily, I'm talking of MPR rate. You know, currently MPR is 27%. So we don't think they will loosen fast because of that liquidity suffix we expect. And reserve should be about 51.9%. In conclusion, next slide. Okay, well, these are some of our recommended stocks. We said the market gained 51.19% last year. These are stocks we think will still do well in the current year. So you have Jitco, UBS, NL, Fidelity, Stanbic IBTC, ATI, Access Corp, Guinness, Unilever, among the consumer goods, UAS, Sibua, Nigerian Breweries, Dangote Sugar Refinery, and Champion Breweries. You have Seplat, Aradel. Okay, so in the telecommunications sector, we expect Airtel, MTN, and NCR to do well. Presco, Como, and Nestle will do well. Lafarge, Dangote Cement, Julia Dweja, CAP PLC, and Bois Cement in the industrial goods sector. In conclusion, our final takeaway: political pressure will likely shift the course or direction of reforms. We are not saying it will abort it, but we think it will shift it from its direct course. In a VUCA Pro-Max environment, investors need to adopt active portfolio management strategy. You can't just buy and hold because variables are changing on a daily basis. And finally, economic predictions, including the one we've spent here, will have very short shelf life. So don't hold us to the predictions because the variables are changing on a daily basis. Thank you all.
Can we do better than this? Can we do better? Can we do better than this? Can we do better than this? One time president of this country, should I tell you the name? President Olusegun Obasanjo. He says the economy, and the economy. Telling us that the economy dictates the pace. Sometimes I argue with Karl Marx. As a professor of economics, I doubt Karl Marx that says that the superstructure determines the substructure. But in our own case and context and climb, you see the substructure, which is the economy, dictating the superstructure. One more round of applause for Mr. Johnson Chukwu. Like I said earlier, I want us to relax. After now, we still go and beat Morocco. We'll beat Morocco. As he was making his presentation, very important personalities. All of us are important. But we want to recognize them because of whom they are. Please permit me to start with that lady that champions the vision. That lady that drives the vision. That lady that gives kudos to our GMD. She's no other person than the managing director of Virgin Atlantic Energy. Virgin Forest Place. Virgin Forest, in the person of Mrs. Nena Chukwu Johnson. If mommy said daddy will not come, daddy will not come. But thank you, you are permitting him, you are encouraging him, you are supporting him to actualize his visions and his dreams. Let's appreciate her one more time. As he was making his presentation, the man that every Nigerian talks about, in my village, Bende, they said there is a man called Taiwo. Who is that Taiwo? He sounded in majestically. Let's appreciate him, please. Let's appreciate him. We'll hear more today. We'll hear more. Then, to recognize one person in our midst, all of us are important, is the president, Chartered Institute of Bankers, Professor Pius Deji. Thank you, thank you, thank you, thank you, thank you. Mayoga, how can I learn economics from you? How can I learn? How can I learn economics? This is practical economics. Practical. So, I appreciate you, sir. Summarily, he made a presentation on the global economy. What shapes the global dynamics? He veered into the SS countries, the sub-Saharan African countries, 48 of them. Africa has 54 countries. Then we have 48 countries in sub-Saharan Africa. And that 48 countries in sub-Saharan Africa is where the game is. Fortunately or unfortunately for us, we are going to meet one of them today. Although they are not in sub-Saharan Africa, Morocco is not in sub-Saharan Africa. So there are 4 countries that are not in sub-Saharan Africa. Morocco that we are going to meet today is among them. Then he talks about the macroeconomic indicators, the trends behind those macroeconomic indicators, GDP growth rate, inflation, exchange rate, fiscal stance, and fiscal policies. Then he talks about the sectoral performance. He talked about the laggers. He talked about the drivers. Then capital market performance, talking about the yield on investment, assets, Osha index, and market capitalization. But there are some takeaways we can go away from his paper. Number one is that the macroeconomy is showing signs of resilience, but weak microeconomic environment. So how do we bridge that gap between the macroeconomy and the microeconomy? Then he also told us that the fixed income market reacts to monetary policy adjustment mechanisms. In other words, when the MPR changes, either positively or negatively, it affects the fixed income market. Then he harped on the exogenous and the endogenous variables that will shape the Nigerian economy in 2026. Please, let's give him a more round of applause. Without wasting time, I think we are coming to the game of why we are here. To hear from these experts that Cowry Asset Management Limited, the directors, the stakeholders have assembled to give more premium to what our GMD discussed tonight. So on that basis, I'll be presenting a brief citation on our panelists. It's good that you know them. It's good that you know their background, so that when they are talking, you see from the points of advantage they are talking from. Okay. We'll start with the chief reformer, Mr. Taiwo Oyedele, who is also a professor of practice from Babcock University. You're welcome, sir. Okay. Okay. Okay, briefly, Mr. Taiwo Oyedele is the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, where he leads a multidisciplinary team driving reforms to strengthen fiscal governance, transform revenue administration, and support sustainable economic growth in Nigeria. He brings over 20 years of experience across fiscal policy, taxation, and economic advisory, having previously served as fiscal policy partner and Africa tax leader at PwC, where he advised governments and corporate organizations across the African continent. Mr. Oyedele, as I said earlier, is a professor of practice at Babcock University and a guest lecturer at Lagos Business School, facilitating courses in fiscal policy, investments, and development finance. Let's appreciate him briefly. He is an alumnus of the London School of Economics, Yale University, Harvard Kennedy School of Governance, the founder and president of Impact Africa Foundation, Advancing Education and Youth Empowerment Initiative. Is one of our panelists. So tonight we are going to be hearing from him about fiscal policy, fiscal governance, fiscal administration in Nigeria. A round of applause for him, please. Another distinguished panelist we have tonight is the #1 capital market operator, regulator, and all. We're talking about Alhaji Dr. Umaru Kwarenga. Please, let's appreciate him. It's not easy. It's not easy. It's not easy. Briefly, Alhaji Dr. Umaru Kwarenga is the chairman of the Nigerian Exchange Group, formerly known as Nigerian Stock Exchange. Okay, and a highly experienced investment professional with nearly 2 decades of leadership experience in the capital markets, banking, and rail sector. He previously served as the managing director at Fimmal Financial Services and currently chairs Ashaka Cement PLC, while holding board positions at Jais Bank. Jais Bank is a non-interest bank, Central Securities Clearing System, and Penman Pensions Fund Administrator. Let's clap for him. Academically, he holds a Bachelor of Science degree, an MBA in Business Administration, Corporate Governance, and Finance, and has completed executive programs at Harvard Business School, New York Institute of Finance, and Wharton Business School. Alhaji Dr. Umaru Kwarenga is a fellow of the Chartered Institute of Stockbrokers and the Certified Pension Institute of Nigeria, and serves on the Presidential Advisory Council on Industrial Relations. He is widely recognized for his expertise in corporate governance, market strategy, and investment policy, making him a critical voice in shaping Nigeria's financial capital market landscape. Let's appreciate him. You're welcome, sir. Then, what a man can do, a woman will do much, much, much better. We have in our midst today a very highly cerebral woman, Dr. Chinyere Almona. Dr. Chi is the Director General and Chief Executive Officer, CEO of the Lagos Chamber of Commerce and Industry, West African most Chamber of Commerce. Yes, no doubt about it. And a leading authority on corporate governance, private sector advocacy, and economic policy. She holds a doctorate in business administration from Business School, Netherlands, an MBA in corporate social responsibility from Nottingham University Business School, UK. With over 30 years of leadership experience, Dr. Chinyere has worked across private, non-governmental, and international development sectors. She previously led the African Corporate Governance Program at the International Finance Corporation, IFC, advising 13 African countries on corporate governance reforms, and served as director at PricewaterhouseCoopers, heading corporate governance, risk management, and compliance. She is also the founder of Vantage Coaching and Consulting Services and served on multiple corporate boards. Her achievements include a recognition as one of the 50 most influential women in governance. Let's clap for her, please. Risk management and compliance in Nigeria. Among the top 40 African women in banking and finance, and one of the 50 inspiring women. She is a certified leadership coach, angel investor through Rising Tide Africa, and a sought-after international speaker on corporate governance and economic policy. A round of applause for her, please. Finally, tonight, another panelist we'll be having tonight is our own GMD, Mr. Johnson Chukwu. Let's clap for him. Let's clap for him. Mr. Johnson Chukwu is the founder and group managing director of Cowry Asset Management Limited, the convener of the Discourse. She's also the chairman, Fidelity Pensions Managers Limited, chairman, Virgin Forest, not Virgin Atlantic Place. I said Virgin Atlantic. And when I say Virgin Atlantic, I remember Chief Johnson Arumeme of Virgin Atlantic. But it seems Virgin Atlantic doesn't fly again. Do they still fly? Yes, good. Now, he holds a bachelor's degree in accounting from the University of Lagos, an MBA holder from Lagos Business School, Pan Atlantic University, and a fellow of the Institute of Chartered Accountants of Nigeria, as well as a fellow Chartered Institute of Taxation of Nigeria. Mr. Johnson Chukwu is an associate Chartered Institute of Stockbrokers, an associate Chartered Institute of Bankers, an honorary senior member Chartered Institute of Bankers, an associate Nigerian Institute of Management Chartered, a member Institute of Directors, and, if I may add, a professor in practice of economics. Mr. Johnson Chukwu has attended various leadership training from renowned institutions, including Harvard Business School, Boston, USA, Stanford Graduate School of Business, California, IESE Business School, University of Navarra, Barcelona, Wharton Business School, University of Pennsylvania, the London School of Economics, United Kingdom, amongst others. He is a facilitator with Terrapin, a world leader in business events with offices in London, New York, Singapore, Sydney, Dubai, and Johannesburg. And finally, he is a fellow of the Chartered Institute of Bankers. Mr. Johnson Chukwu is a regular speaker at AFSIC Investing in African Conferences based in London, and a media commentator on the economy, capital market, and banking industry. And if we are very observant, you see that every day, every week, he's on one television discussing the Nigerian economy. Let's put our hands for him. Let's put our hands for him. Okay, you may be asking, what do we want to do here? We want to expand more practically on what he presented to us tonight. The questions you wanted to ask him, please get it ready. Let's throw it at the right time for him and for them. Our distinguished panelists, ladies first. Ladies first. Dr. Chinyere, you are welcome. Alhaji Dr. Umar Okwaranga, you are welcome, sir. The chief reformer of our generation. You are welcome, sir. And our own dear GMD, Mr. Johnson Chukwu, you are welcome for that wonderful presentation. Let's allow them to drink the water before we go ahead. Let's allow them to sip the water so that we ask them questions. Eh? Is it what? Oh, tax. Oh, let's tax the water. Thank you for reminding us. Let's jam our hands for them, please. Let's appreciate them. Okay, ladies first. In a minute, can you briefly tell us your perspective about the Nigerian economy in 2025? Okay, 2020. Is it 2025 or 2026? Okay, 2026. What are you expecting about this economy in 2026? Making credence from what he presented to us.
Thank you very much. I like the way you moderate.
Thank you, ma.
Yes. And thank you to Cowry for convening this session to discuss issues around our economy. And thanks so much, Mr. Johnson, for that presentation. It was very insightful and a lot of food for thought in the presentation. So what do I think? I mean, 2026 is leveraging 2025. So where we're going to in 2026 is based on where we have been in 2025. And while there are so many or some positive feel about the 2026, I think it's also still clear that businesses are still struggling. The cost of business is still very high. So towards the end of last year, we had a business cost of business monitor survey done by the LCCI, and it was clear that businesses are struggling because costs such as power is high, and that affects every other thing. Logistics cost is very high, that affects every other thing. In fact, when we think about the economy and where we are today, when he said that there was no capital vote last year, that's really disheartening, because if we don't have the right infrastructure in place, businesses can't operate. The Nigeria's infrastructure stock today is about 30% of GDP. World Bank expects that in most emerging economies should be about 60 to 70%, and developed economies should be about 70, 80 and above. But we're just 30%. That means that businesses will have to self-provide for the things that states should provide. So businesses have to generate their own power. You have to invest in boreholes, water treatment, waste systems. You have to think about your own security. You have to do private haulage for things that the state should actually provide. So businesses are constrained. They're being challenged on all sides. And because the purchasing power is still low, I mean, the purchasing power has been eroded in the past couple of years. That means that as you even think of producing with all the difficulties, it's difficult to pass it on to the final consumer. So there are a lot of things that we need to think about on how to improve the ease of doing business. But the other thing that also concerns me is around the regulatory inconsistency. He showed a slide with some of the regulations and the pushback, because we have to keep pushing back. If you bring out a policy, we wake up in the morning and something has changed, a big levy has been introduced, we need to keep pushing back, and that's a lot for businesses. They can deal with levies. If higher levy is okay, then we know that there's a levy. But when we are not sure what is coming up, we can't plan. And when we can't plan, then it becomes a real challenge. So going into 2026, I'm cautiously positive, but I know that there are real challenges that we need to deal with if we're going to get the private sector to get moving in 2026. Thank you.
Thank you. A round of applause for her, please. Alhaji Umaru Kwaranga, how do you see 2026 in relation to the capital market?
Okay, thank you very much. Let me join my sister in appreciating Cowry for organizing this gathering here today. For me, from the capital market perspective, and angels in particular, I'm still positive. Yes. In fact, more positive than your GMD for the 2026. First of all, for us at the NGX, you have seen where we are coming from and where we are as at today. Year to date, within a week, we are up by over 7% already. We have achieved 51.19% last year. It's not by mistake. It was deliberate. So many factors have come into play for us to achieve that. And we are very hopeful that 2026 is going to be much, much better. From the presentation made by the GMD, he has made some presentation on the macroeconomic policy. It's not painful, but decisive and timely that this government took those decisions, including the tax of Taiwo, which I'm coming to that. Today, we have already passed the level where people are struggling. Which rate are they going to use for the FX? Where are they going to get that FX? How can't our investors, especially the foreign investors, repatriate their profit, their capital gains, and the rest? We are past that level because of the decision that Mr. President took from day one. Last year, we doubled our market capitalization, but when you look at where we are coming from, when this administration comes into play, we are coming from less than 30 trillion to over 100 trillion as of today. So the reforms have already been made. They are there. What matters to us this year is the issue of consistency, policy consistency. Most of the structure changes have already been done. For us, we have already factored and priced most of them. We are deepening our market. A lot of companies are now becoming attractive to be listed on the exchange. If I continue to mention the factors, one of the things that your GMD have not mentioned is the expectation of projections. We have achieved from 51%. What should we expect for 2026? He has not mentioned that about the capital market. But when he brought a slide where he is making some recommendations of some of the stocks, more than 50%, I've noticed from the audience, brought out their phones and they are taking the picture of that. This has demonstrated to me the investor confidence that we are now having in this market.
Let's appreciate it, please.
So for us, we are very hopeful that we are going to achieve much more than what we have achieved last year because of the macro indices. They are all positive when you look at them. Interest rate coming down, inflation coming down, exchange rate have already stabilized this, GDP going up, reserves coming to our own. We are attracting some of the stocks that he has not even mentioned, the Dangote refinery that we are bringing in this year, the even state-owned enterprises that we are already in discussion with the government so that we can bring the NNPCs, the MPS of this world, so that they can all come into play. The issue of the corporate governance, the issue of the regulation, that will go a long way to determine what will happen in 2026. But my simple answer is that I'm positive 2026 is going to be much, much better, especially with the clarity now with the tax reforms, which I'm coming to that. If you can recall, there was a time toward the end of last year that there's some 2-3 days panic selling in our market that has brought down our market capitalization due to the rumor, misinformation, lack of clarity, and so much concern. And we quickly engaged the policy makers, the policy decision makers, especially Taiwan. And I want to use this opportunity to appreciate what he has done for this country last year. When we engage him at NGX, I believe so many other institutions have engaged him after that. I know from our own Chartered Institute of Stockbrokers, the Association of Issuing Houses, the SEC itself, he almost every day, he's either on the TV or in this type of gathering, explaining, clarifying the issue of capital gains tax. And for us, we have already passed through that. And that's the success we are seeing at the beginning of this year. And the only way that you can see this positive going up is when we start getting the earnings from the companies from this quarter and next quarter. And you will see we are going to sustain this positive momentum for 2026. Thank you.
Thank you, Dr. Umaru Kwaranga. The chief reformer of our century and time, when the GMD was making a presentation, he identified a gap between the macroeconomy and the microeconomy. Do you think, sir, that gap will be sustainable? Or will the tax reform in implementation now bridge that gap? Did you get what I said, sir?
I got it.
Okay, good.
Thank you very much. Good evening, everyone. Thank you to my brother for hosting this event and for inviting me. So when he called me and said he would like me to come, I said, Capital Club, say yes. I said, rich people will be there. Let me come and tell them why they need to pay more tax. Economists get away with so many things. So if a pharmacist gives a wrong Okay, it's working now. I've been talking since yesterday, so I can't shout. We had the session with no, I can't was even today. So yesterday they said we're not talking to the younger generation on TikTok. So I said, let's do TikTok. That's how we did TikTok. TikTok space. So then we start by 8 o'clock. We didn't finish until past midnight. The energy of those young people is unbelievable. Anyway, so economies get away with so many things because they just need to predict, and it doesn't have to be correct. From World Bank to IMF, they keep revising it. And I wish we can have that luxury as well when it comes to other areas of our lives. So my take would then be, since you can't hold me to it, is that for 2026, the outlook is more positive than any predictions you have seen. I won't go into the details, but I'm that optimistic. For example, there is the Venezuela Uncle Trump issue that people, in my view, are blowing out of proportion. Venezuela has 303 billion barrels of proven reserve. It's heavy oil. They're producing barely 1 million barrels a day. Nobody wants to invest there. Even if you invest, before you can add an additional 1 million barrels, it will be between 5 to 10 years, costing around $80 to $100 billion. That was why the CEO of Exxon told Mr. Trump, it is not investable. Especially when the person that's asking you to go and invest can tweet again tomorrow. Even if he doesn't tweet again, he has maximum of 3 years left. The investment horizon is 5 to 10 to 15 years. Let's say they even add extra 1 million. Global production of crude oil around 102 million barrels a day. Consumption 101. Add additional 1, it won't crash anything. Yes, exactly. So I think we should be more realistic with our projections. I'm not saying we should just be all over the place, but I also don't think the prediction of $50 oil will crash is supported by data. So having said that, I do think, to your question, my brother here, we are not looking to sustain the difference between the macros and the micro. That would be counterintuitive. The economy was in serious decline, was heading towards a total collapse. The reforms were introduced, and it came with volatility. Then the economy stabilized. They are moving to the stage where you need growth and expansion that is sustainable. And that is how you want to translate the macro outcomes to micro outcomes for our lived experiences, so that families, households, individuals can experience it. In my own view, 2026 is the year that translation will be accelerated. And one of the factors that will make that happen is the tax reform law. So unlike reforms where government will say, let's do this, people will say, no, we don't like it, people will push back, and government will reverse it. You will see that government has been more reluctant to reverse the tax law or even suspend it. And the reason is not far-fetched. It's because while it is not perfect, and you will never have a perfect document from human beings, it's the way God reminds us that we are still human. It's not perfect, but it went through a very thorough process. And I may be biased, but I don't know of any other reform in Nigeria that's gone through that extent of intentionality. We spent nearly 18 months on the drafting, meeting with different stakeholder groups. Members of the committee are more than 100, all walks of life. We have even students, 45 students are in the secretariat from 22 tertiary institutions across Nigeria. We understudied more than 50 different countries worldwide. We went through all the development plan for Nigeria before independence to date, in details. How do we align the tax policy to our development aspirations? We identify what's broken with the system, and a lot was broken. From taxing poverty, our poorest people were being taxed. You know, when I see people do analysis online to say, how much is 800,000? Why can't they exempt 5 million? I say, if only you know what we went through to get to 800. First, the 800 is called taxable income. That's not your gross income. When you take your gross income, you take out deductions. There are 5 of them. You take allowances. There's one of them before you arrive at taxable income. So that 800 easily will translate to between 1 million to 1.2 gross income. But beyond that, there's a provision in the law that says if you earn national minimum wage, you are not taxable. So if minimum wage is increased today to 500,000 naira a month, it's automatically exempted from tax. So that's there already. But what people don't know is that when we came up with the proposal about increasing the threshold of exemption, it was tough with the subnationals. There were 2 states who said to us that we are exempting more than 90% of their taxpayers. And they said, where are they supposed to find IGR from to pay civil servants? Thank God the explanation we could find was to say, Your Excellencies, inside FAC, the amount you are getting has also gone up. So in a way, you should not be broke. But do you know that those critical stakeholders, if you don't take their issues and concerns into consideration, you will never have a reform. When they said Mr. President should withdraw the bills because of VAT formula, many people thought it was an easy conversation. When those guys said those bills were not going anywhere, they were not going anywhere. I've learned firsthand the way we say you need political will. I have now learned that it's not enough. You can have political will from Mr. President and you still can't get things done. So at the end of the day, you need to manage stakeholders and align somewhere. It may not be the ideal thing you wrote in your textbook, but it might be something that is better than you have before. They say perfection is the biggest enemy of progress. Let's make progress. We have distortion in the economy where we have tax policies that were making it difficult for investment, making it difficult for growth, small businesses, large, multinational, investment confidence. One of it is special economic zone. People are supposed to be in the free zone and compete with the rest of the world. They are in the free zone and they are selling to the domestic market, competing with domestic companies that are paying taxes. How is that supposed to even balance? They can't survive. We should just declare Nigeria as a free zone and print money to spend. One other thing that people don't realize is that if you don't allow the tax system to work, because if you want to be popular, just go on TV or social media and say, they are stealing our money. What have they done with subsidy money? Nobody should pay tax. They will clap for you. I'm not saying that government is the most efficient. There's a lot of room for improvement. But that does not in any way invalidate the fact that if you eliminate corruption here in Nigeria today 100%, and you eliminate waste 100%, Nigeria is still a poor country. For 2026, federal government budget 58 trillion. All the states combined 35. Put everything together, is less than $70 billion to run a country of over 200 million people. New York City has more than that. So, if we don't design the system to collect taxes appropriately, 2 things will happen. We'll collect taxes from the wrong people. There's already wide income inequality in Nigeria. You know, I was saying at an event before coming here that I grew up in the village. We were very poor. We didn't even know how poor we were because everybody else we saw was equally poor. So we were happy. We were happy. If you are poor and you see rich people, you will be sad. That is the problem with income inequality. As if that is not bad enough, we leave those rich people and we are overtaxing the poor people. When we did VADES in 2017, the vice president was acting as the president, and he said, based on data provided nationwide, 96% of income tax in Nigeria came from low-income earners. That cannot make sense. We're looking at the data for South Africa. Last year, South Africa collected over 60 trillion naira equivalent from personal income tax. 60% of it was paid by the top 1.5%. That means less than top 2% paid more in income tax than the rest of the population combined. The exemption threshold in South Africa is very high. 60 trillion naira personal income tax. That's more than all our revenues combined from all sources of taxation, local government, state, federal, oil and gas, national mineral, everything. Everything.
More than our budget.
Yes. And here we are with 4 times their population, personal income tax, we struggle to collect 2 trillion naira. I know we cannot say Nigeria economy is as developed as South Africa, but how do you reconcile those numbers? You can't. If you don't allow a proper tax system to take root in Nigeria, the 2 things that will happen is we continue to overtax those people and expand the inequality gap. And they become more unhappy. There'll be social discontent. There's this saying that the poor man cannot sleep because the poor man is hungry, but the rich man cannot sleep because the poor man is awake. The second thing that we're going to do with that is government will print money. You can't stop them from printing money. When government prints money, it is the way they collect taxation without legislation. Yeah. The danger of that, God bless you, is that that form of taxation is also regressive. It punishes the low-income earners far more than the rich people. You know why? Because the rich people have assets that can protect their wealth. They're the ones who have properties. They're the ones who have the dorm account. Our dorm account in Nigeria is around $30 billion. There's no poor person that has $1 inside that amount. So it's in our enlightened self-interest collectively to design a tax system that works. People say we don't know how government is spending our money. Government is not accountable. I agree 100%. But it doesn't change the facts that if government was collecting 10,000 naira from me before and they were not accountable, and a new law says they'll collect 6,000, why am I fighting the 6,000? Even if they are still not accountable, I'm better off. So overall, this tax reform is helping us to accelerate how we translate the macro outcomes to micro results and reality for the ordinary Nigerian. This 2026 tax reform law will increase disposable income and then reduce the prices of basic consumption. The biggest pain I have in my heart is that the narrative is the opposite of what is in the law. And narrative can drive your realities. So I've read in newspapers where they say people increase their prices. And they said, why? And they said tax law. Which section of the law? They don't know. My friend who is the director at NESG wanted to make a dress during December. Taylor gave the guy a price. It was too high. He said, I know you are very busy with year-end festivity and you're quiet, so I'll wait and come back in January. Taylor said, don't wait so that in January, the price will go up even further. The guy said, why now? He said, tax reform. So I think every one of us has a role to play. If we continue with negativity, if we continue with misinformation, we would undermine our progress. There is a prejudice premium. All of us will pay it. But I hope that will not be our reality in 2026 so that we can move forward as a country. Thank you very much.
Thank you. Thank you. Round of applause. Okay. GMD, in a minute, can you hype more on the theme of this discourse in a minute, sir, so that we can drive successfully?
Okay, I will actually take this in a minute because I'm enjoying the conversation.
Okay,
so,
sir.
So I'm going to allow them a lot more time to speak.
Okay.
Well, the key thing is that we're dealing with an environment which, like Taiwo said, where we have a misalignment between macro and micro. And the micro environment had not caught up with the macro. And therefore, you are seeing increasing government revenue, but you're also seeing weakening household consumption. So the key thing I think the government needs to focus on, how do we drive an improvement household consumption. Because for you to sustain these reforms, you need to have a share of the heart. And that share of the heart will come from people feeling that their conditions are improving, or they can see an improvement in their condition of living. So I think in terms of what we expect this year, because it's an election year, we're going to see a lot more liquidity injection into the economy, that some sectors will benefit from it, people in the entertainment industry, people in textile, fashion designing. So there was some flow of funds into households. So I think should see an improvement in household income, because eventually the money will circulate. People in food and beverages, you see breweries, we see demand increase in demand because campaigns will start this year. So I think we should expect that gap between macroeconomic performance and micro will begin to narrow in the current year. And that needs to happen fast. Otherwise, the discomfort of the micros will lead to pushback which we are concerns about will politics trump over policy. Thank you.
Thank you, GMD. Okay, at this moment, what we want to do is pick one more questions for each of them. Then we'll come to the audience, because you are more of the reason why we're here. You ask your questions, make your comments, and your observations. Those of us online is also permitted to do this. And because we want to run an inclusive agenda, we'll take questions from the women and from the men briefly. Then we'll come back to them for their summaries. Okay, let's go to Dr. Chinyere for a question that we need clarification from you as the director of the Chamber of Commerce. Okay, the question is like this, ma. The Nigerian economy in the recent past has recorded some positives in terms of disinflation, exchange rate stability, and improved GDP growth rates. The question is, have these improvements translated to improve consumer demand and business expansion for your members? Let me recapitulate on this. The Nigerian economy in the recent past has recorded some positives in terms of disinflation, exchange rate stability, and improved GDP growth rates. Okay, the question now is, have these improvements in the macroeconomic indicators, have they translated to improved consumer demand and business expansion for members of the Chambers of Commerce and Industry?
From the last discourse from Mr. Chukwu, it's clear that the macro, there's a gap between the macro and the micro today. And it's clear why that is so. And it's evident for everybody that in terms of purchasing power is less. And that will mean, and if the cost of doing business is so high, then businesses are trying to stabilize rather than expand. And that's what we're seeing with our members, because they're still trying to find, their feet after almost like the storm of the last 2 years. But from the discussion so far, it's clear also that there are positives, there are positive vibes in the economy. And so there are real interests in Nigeria. Investors are interested, and we have a lot of countries looking to say, can we have trade missions? We are interested in investing. We want collaboration with Nigerian entities. So we're seeing a lot of those. We're seeing a lot of interest in that regard. That means that they have also seen that, or they have some confidence in where we're going, in what 2026 is supposed to look like. And that's positive. How quickly the micro will catch up with the macro, it's a matter of time. It will happen, we've all said here, but it will take time. It's not going to happen overnight. And that means that Nigerians will have to be patient, but the reforms must stay the course. We can't shift from where we're going to. We must keep on the track and make sure that the reforms stay. yes, this is an election. It's an election year. We're preparing for elections, so that means that you probably be seeing a lot of government expenditure. You may be seeing off-budget expenses. You may be seeing, we've talked about fiscal discipline over the years, but then with the being in an election preparation period, you may see that slacken a little. But we are hoping that government will continue with the reforms, all the reforms, FX reform, tax reform. We should just continue, because once we do that, we are that confidence level is sustained. And once we can sustain that confidence level, we will attract investment, but also will encourage domestic investment. So Nigerians are now more willing to invest rather than just put money in the bank and store it, but they're now more willing to invest. So we need to see that happening. We also need government to think a bit more about how to support the manufacturing sector, the industrial sector, because that's the sector that will create huge employment. Industrial sector, and then the small businesses that will create a lot of employment. And if we have, if we're able to create employment, then we'll have more money in the hands of people, and then they can spend. So that's we need to continue with the reforms that we have today. There have been some shifts, even with credit to small businesses, but we need to do more. We need to target certain specific sectors, like agriculture, agro-processing, technology, tech supporting everything, because with tech, then businesses are more efficient, and if they're efficient, then the cost of business will kind of drop. So we need to kind of keep on it. It's today it's not there, but we're positive that with all that we're seeing, all that we're doing, the Nigerian economy is going to be better off for it, and that businesses are, like I said, we are cautious. At least our members are cautious, but they are hopeful. They're hopeful that these reforms will translate into very positive economic, fundamentals for us.
Thank you so much. Yes, the outlook is quite positive, but the government needs to do more to support the industrial sector, because the industrial sector holds a larger linkage with the rest of the economy. Thank you so much for that response. Okay, to Alhaji Dr. Omar Okwarenga, a question for you, sir. Given that 2026 will be largely dominated by political activities, like our GMD stated in his presentation, what is your outlook for the capital market in 2026?
My simple answer to this question is still positive.
Positive.
Positive with all confidence. Historically, election years, we have seen that there's some volatility in the market. And but luckily for us, when you look at where we are coming from a position of strength. We have said that our market has been one of the top performing market in the world, has been demonstrated here earlier. Secondly, the investor confidence is back into our market, and with all humility, for the first time, we are having a president that is not only a politician, but is a businessman. And he has demonstrated that with some of those reforms that has already been brought from day one when he became the president. And that has gone a long way in stabilizing the capital market and NGS in particular. So for us, yes, election years normally have some of those challenges. But when you look at the categories of our investors, last year, the domestic institutional investors and the retail investors are part of maybe 80% of that success story of our market. And they are still here. So the challenges that we may likely have are maybe from lack of certainty from some foreign investors, which I believe that may not have so much impact in our own market, because of the reforms have already come to stay, because of the direction that we have gone from the depth of our market, and so many structural changes have already come in. And even when you look at the alignment and realignment of our political scapes, I don't see, even from the opposition side, when you look at most of the likely candidates that people may likely be called are informed politicians, that I don't see them reversing any of these reforms, any of these policies, if they even come to play. So it's not issue of saying that there's any doubt for 2026. Election year is here, but I'm assuring you, we have some temporary profit taking, and but the earnings of those organizations that are going to come in from this first quarter and second quarter will go a long way. For us in the market, I believe 2026 is not going to be different from 2025, despite that it's going to be an election year, because these reforms has come to stay. For us in the market, we have already factored and priced the tax. We have already moved on. We have seen from the performances. We have seen from the interest that Nigeria have shown in the Nigeria capital market. We have seen the investment that we are making in infrastructure, in terms of technology, ease of getting investors to come on board. So what we are just looking at is the collaboration between the policymakers, the operators, and all stakeholders of this capital market. And that's what Taiwan has been doing in the last 1.5 years. And I believe it will continue to do that. We at the NGS and the capital market are always part and parcel of all the reforms agenda of Mr. President. We have followed him to various countries where he has gone to market this country. Today is in Abu Dhabi. Tomorrow when he come back, he may likely be in Brazil, or he's going to be in US and the rest. We are all into this. So I don't see any change in the positive momentum of 2026, despite being an election year. Thank you.
Thank you so much, Alhaji Dr. Umaru Kwaranga, for that incisive response to the question. Thank you so much, sir. The reform has come to stay. What we need is collaboration, positive collaboration, so as to get the outcomes positively well. Thank you, sir. Okay, the chief reformer of our time. Because of time, we want to ask 2 questions simultaneously so as to beat the time frame. The question is, with the commencement of the new tax implementation, what do you consider as the biggest misconceptions businesses and individuals currently have? And what risks do you think this poses, those misconceptions poses to the full implementation of the law in 2026? Let me reframe.
No, it's okay.
Okay, good. That is number one.
Okay.
Okay, number one leg of that question. Number 2 is, what are the benefits, if any, of the agreement entered into between Nigeria and France on tax information management? Can you please, sir, vividly explain the purpose of that mutual agreement between Nigeria and France and the choice of the partner country, France?
Thank you very much. So let's start with the first one.
Yes, sir.
So what is the biggest fear that we have and misconception about the reform? 2 of them, and they're related. One is, there's a general perception that tax reform is to take more taxes from the people, even when they can't point to the provision of the law that is taking more from them. Of course, it's a reset. So if you have, 20 provisions reducing taxes and you have 2 increasing them, there's no stakeholder who is worse off, everything considered. But that perception is there. I really don't know what we can do about it. People think that the tax reform is there to take more money. We've seen analysis, which is sometimes disappointing. These are very knowledgeable people, but they just haven't read. They go on TV and say, companies are dying, people don't have money, they're doing tax reform. Who do they want to tax? The reform is saying that the burden is too much. Let's reduce it. So you can't say we are too much in a hurry to do it. You can't say the timing is wrong. We should have done it a long time ago. The next best time is now. the risk that creates when you think that this is coming to take more money from you, and some people say it will create inflation when it is designed to actually be disinflationary growth, is what we're expecting from it. So when people have the negative and the opposite narrative, it can then lead to actually inflationary impacts, inability to crystallize the growth we're looking for, and investors' confidence we're expecting. Because without investment, you can't have growth. We may then undermine it. That's the biggest concern that we have. So, but we think the more we engage with stakeholders and we explain to them, the session I had with ICANN earlier today, we were talking about accountability. And I said my view is that accountability means, particularly when you're in public service, you owe an explanation to the people. You're not doing them a favor. It's your duty to explain. That's what is called accountability. That's why someone like me, I'm not tired of explaining. So if we get more people to understand it, and hopefully when they understand it, they don't just keep it to themselves. They can explain to the next person in their WhatsApp group, in their association, trade groups. Because the more of us that are trying to explain the right way, the better we'll be able to reap the benefits of the reforms. The second question about why the agreement with France, and so on and so forth. Let me tell you what it is. And I'll tell you what my personal view is. When we started this reform, normally government committees, when they are doing reforms, they do study tour. They are supposed to go to different countries to understudy how they are doing their own and see what you can learn. Our committee was set up as a fiscal policy and tax reform committee. There's a fiscal aspect of it where we're looking at government spending, efficiency, borrowing, and all of those other stuff. Which people did not even take interest in those things. They only just started knowing that there was a committee when there was tax bill. So we said to ourselves in my committee that we will not be traveling around the world because that is not efficient. You don't have to physically go to a country to learn what they're doing. So we said, why don't we learn online? So we went to ambassadors. We went to more than 30 ambassadors, more than 15 from the EU. And we said to them, we're doing this reform for our country. Some of the things we are trying to do, we know you have done them before. For example, I think it was Sweden. The ambassador said it was them that started tax ombudsman. We created it under the new law. We removed the man to say it to be gender sensitive. Why is it not a woman? So we just say a tax ombud. We said we want to do harmonization of the tax system. I do not see any other country that does it better than France. France have DGFIP. DGFIP is their revenue collecting agency. DGFIP is acronym for one complicated French name. DGFIP, of all the OECD countries, they're the most efficient in collecting taxes. They collected last year 44% of GDP. DGFIP has 90,000 staff. Their budget to run the organization, 8 billion euros. They collected more than 1 trillion euros for the government. When in one of our online meetings with them, we said, how do you deal with tax evasion? They were like, if they start to collect, we collect it. Like, for them, it's not a question to be asked. They're so efficient. Harmonization, collecting it. So actually, there's another thing they do that I really love, but I know it won't happen in Nigeria anytime soon. Because they collect all taxes and revenue for everyone, they also process payment for everyone. When I say everyone, I mean government. Because they make collection and they make payment, they also have a statutory duty to prepare the accounts. And that just makes it so easy around transparency. Because you can't influence them. You earn 10. You said they should pay 8. They are telling people, we collected 10 for them. They said we should pay 8. This is what we use 8 for. Fantastic. We had a meeting with HMRC. So the ambassadors were very helpful. So they linked us all with Ministry of Finance, Tax Authority. We spoke to them. Once we speak, of course, before we speak to them, we'll do our research about what do we want to learn from them. So when it was the time for the French, because we were most impressed with them with harmonization, so they had more requests from us. We said, we want to learn from you. How do you do harmonization? We are doing fiscalization, anything we can learn from you, and a lot of other things. So France said, why don't you come? We said, we don't want to come. They said, okay, we should know where that they will come. That's how they came. Oh. France sent a delegation of like 5 people to come to Nigeria for 1 week. So they spent time with us. So our committee said to them, see, this our committee is temporary. We're just here to help Nigeria with a reform. Any help that you want to give us or that we ask you for, do it at the institution level. And the institution that has the most of the requests we made of them was FRS, now NRS. So they went to NRS, spent time with them. The NRS people compiled what they wanted. France said, this thing that you have written that you need our help with, let's document it. It was that documentation that they said they should sign, no, that became MOU. All the other countries, we did not do MOU, we just agreed, email, and nobody is making any noise about it. Once Nigerians just heard MOU, because FRA just signed innocently and put it on Facebook and Twitter and social media, they say, hey, they have secretly signed an agreement. They want to give data. The first one I saw was a professor that wrote it. The professor wrote a long article. They have signed. France will connect to Nigerian data. We will lose sovereignty. They will do this and that. So when I read it, I was initially confused. I said, is it not that thing that I saw? Why is this person not saying that I think? Why is he saying like he knew authoritatively? And people pick it from there and everybody just start analyzing the danger of allowing them access to data. So I said, how do I interpret this? I came up with 2 interpretations. One is that we have an inferiority complex as a people. And I'll say it without any apology. You know why I say that? 2 parties, some French people, some Nigerians, they came together and said, MOU to help you with capacity building and knowledge in your tax reform. Nobody in Nigeria thought that it could have been that France will give us access to their data to see how they are doing it. You know why? These French people must be smarter than that. They are not stupid. It is these Nigerian people, I don't trust them. It's inferiority complex. We are not that daft. In the new tax reform law, even Nigerian entity cannot get access to taxpayer data. It's defined as confidential. The taxman will go to jail. There's an international protocol for exchange of information that Nigerians signed up to. More than 100 countries are there. We are not that stupid. So, in a nutshell, my brother, it is not only France. It's just that France is one that was trying to be more diligent in signing paper. We've done with plenty. We did not call it MOU. So we want to learn. We cannot be making the mistake that other people made. You lose nothing. We are learning from, in fact, of all the tax authorities in the world, I would say that we are learning most from Rwanda. That small Rwanda, they are impressive. Let me stop there.
Thank you. Let's clap for him. Let's appreciate him. What a wonderful insights. It's not as if Nigerians were sold to the France. Let's correct that impression from today. It's just an MOU that was signed between 2 countries, Nigeria and France. So let's correct it. Quickly, I want to come over to the audience because you are the major reason why we are here. Ask your questions, make your comments and observations. So I think we will take 3 questions from the audience here, physically present, and then 3 questions, if time permits us, from online attendee. Okay, 3 questions each. Okay, let's take from our attendees online.
And this question goes to Alaji Dr. Umaru Kwaranga. And the question is, the young generation are coming into the markets, which is the capital markets, but the use of technology is slow to attract these young people into the markets. Majority of stocks are below 100 naira per share, but we have betting apps everywhere, and these younger generations are embracing it. And the question says, what can the NGS or capital market do more to increase awareness and attract these young ones into the market for investment against betting? As against betting, thank you. As against betting.
Okay, thank you very much. I think this is an apt question, but I want to take us back to see where we are coming from and what we have done in respect of that. With a population of over 200 million, we had an investors that are less than 1 million in Nigeria as at the time of when Tinubu took over this country. What we have seen is a gap as envisaged by them. If you see where we are coming from, when you are going to buy a share before, the processes you are going to do, the paperwork and the rest, that has been something that's been discouraging, not only to the younger generations, even to some of our informed investors. We have invested a lot in the last 2 to 3 years in terms of infrastructure, specifically on the technology. Let me give you an example of the banking recapitalization that just happened last year, which is going to be concluded this year. We invested in a platform called NGS Invest, where at the comfort of your room, you can invest in the Nigerian capital market. And 60 to 70% of that success story of over 3 trillion comes through that app. So we have taken that into consideration. We have noticed that, we have seen that gap, that the future, when you look at the population of Nigeria, the younger generation constitute over 60%. And these are the ones that have been investing in all these cryptos, all these apps. So we are already investing in technology where we can attract those ones. We have seen what Pampe, OP have done to this country. Even if it means just to copy, we know that you see the number of depositors or customers through those apps. And that's why deliberately, every invitation that involves the younger generation, wherever I am, I'll try to make sure that I've attended that. And any partnership that we can be able to do, like the way Tai was mentioned today, when he did that TikTok with the younger generations, the time that it will take. So we have come a long way that today we are close to almost 10 million Nigerians that are on the platform of the NGX, thanks to this new technology that was brought to NGX Invest. We are doing a lot. When you look at toward the end of last year, we have reduced even the cycle. Because we have noticed that today, people prefer the younger generation to use the Pampe and the OPay because immediately they do the transaction, they get the alert there and then. That's the difference from the other banks and the rest. And what we are saying, okay, the time that usually take for the cycle T+3 of the transaction cycle must be reduced. If not T+0 or T+, let's start with the T+1. That's what we have implemented to reduce the cycle, to encourage the younger generations so that you can do this transaction faster and better. We are working to go to T+1 before the end of this year. Another thing that we are doing is to take into consideration our trading hours in the market. As the time we close the market here, that's the time that the US, they are waking up. We have applied to the regulators, let's extend this period so that we can be able to capture every prospective investors, either locally or internationally, either old or young. But our target are the younger generations. And they'll be rest assured, the one that have already given that question, we are ready to work with you people to improve this market in 2026. We are doing a lot investment in terms of the infrastructure, as well as the technology, specifically for the younger generation, so that we can make it ease of doing business for investors in Nigeria. Thank you.
Thank you so much. Let's appreciate him. Okay. Okay. Any other question from online? Okay, let's take the fiscal questions now. Okay. Oh, okay. Let's take this one before we come to the fiscal audience. Okay, this is to the chief reformer, to Mr. Taiwo Oyedele. Are we expecting any further clarification on capital gain tax threshold? That is not correct. The spelling is not correct. Okay, good. As some investors might be on the wait to see if post can be shifted in the nearby future.
So thank you for that question. So this is one of the areas where we need better narratives that are reflective of what is in the law, not what we make up. So the law says, by the way, everyone is entitled to exemption on capital gains tax if the proceed is not more than 150 million. Your exemption is automatic, and the gain is no more than 10 million in 12 months. Your exemption is automatic. No explanation, no conditions attached. If you are above that threshold, if you are PFA, you are exempted. Real estate investment trusts, then the rest that are left are entitled to that exemption subject to reinvestment. So what that means is, if you're a multi-billionaire and you sell shares worth 2 billion naira and you want to exit permanently, and you don't want to reinvest, you pay the tax. Do your calculation, take your losses, take your cost of investment, take every related cost. But if you don't want to pay the tax, just take that, your 2 billion proceed, reinvest it, and I don't want to sound like I'm giving you tax loophole, and the day after you leave, and you won't pay tax. What you then pay is the transaction cost, which is not a lot, and that also helps with more activities in the markets. Right, so I actually think that what we have now is one of the best regimes in the world. We are not saying it's perfect. We're saying the feedback we are taking from our stakeholders, we're taking them on board. In fact, we even have regulations we have drafted. Unfortunately, this issue about there's alteration here, there's no alteration here is the reason why we haven't released those guidelines. You don't want to reference a law and say according to section 15. And they will now remove section 15 from the final gazette. You now start explaining yourself. So we think a lot of the issues we can address with regulations. And if there are one or two that we are unable to address with regulation, we're already compiling what we want to present to Mr. President to say, Your Excellency, we see these things with the new laws. Can we do a finance bill to amend it, even this same year, so that we are making progress? So essentially, there's no goalpost to shift. We have a law. We are moving ahead with the implementation. It is not perfect. We're getting feedback from our stakeholders. And those feedback will address the issues in two ways. The ones that can be addressed administratively, we're already drafting the regulations. The ones that require that we amend the law, we'll propose amendment to the lawmakers through Mr. President. So I think because these are our younger generation, they're not just doing betting, you know. In virtual assets, these guys have tens of billions of dollars, not naira. These young people, their virtual assets is taxable. The amount they are investing, it's not like they have $1 million to invest. It's $200, $50, $80. That's what adds up. We are not telling them that in the capital markets, the returns are better, even in dollar terms, and they have full exemption. If we can just attract $10 billion from this young population, imagine what that means. So that's why I'm saying that please let us balance the narrative. If you go on the street and ask any young person about stock market, he will say there's 30% tax, because no one is telling them that they're exempted. Right. So therefore, in 2026, with the right narratives, I agree with my brother. My view is that the capital market will do even better in 2026 than in 2025. Thank you.
Thank you. The capital markets, the engine of the Nigerian economy, will do better this year as it has done last year. Let's give him them round of applause. Okay, we have two more. We'll take two more questions from the physical audience before we take our remarks. We need to be gender balanced. A man, and a lady, if possible.
Good evening, everybody. My name is Chinedu Makata. I am the MD of AAA Finance. And this question goes to Mr. Taiwo. Thank you very much. I came in a bit late, but I picked up a good number of points from what you say, what I heard you say. And there's something you alluded to that is so interesting and germane. You know that the reform came with removal of fuel subsidy, increase in power tariff, transport costs, and the rest of them. Automatically, this hits the household income of those low-income earners that make up of 70% of the population of the country and the demography of the household demographies. So my point is this: I know that what you're saying is that the tax law is actually not punishing, is not as harsh as it were as what you're trying to change, right? However, there are consequences of those reforms that had worsened the situation of that low-income earner, that necessitates some further adjustment on your threshold tax base. I'm also happy that you mentioned that you take back this feedback, and if you need to put up additional amendment or so, that you go back to the presidency to talk about it. Take, for instance, the international poverty line is $3 a day or so. So it means that for a month, someone that is earning $100 is $100 is 150,000 naira. Minimum wage is 70,000. We in private sector, I believe that most private sector participants in VI and in Lagos, none of them will be paying at minimum wage. But we know how difficult it is to manage even entry-level staff that you take from OND, fresh graduates. So my point is, sorry, let me summarize. So my point is, don't you think that the potential amendment should be in increasing the threshold, say from this 800 and you mentioned 1.2 when you do other deduction, to like 2 million or thereabouts? I know that you mentioned that you have challenges with the states, because some will say, look, if you do this, we're going to lose out 90% of our tax. But they should also remember that their earning from federal government from other things has increased. So if they lose those, they can now augment from the other money they get from the other side. So I think this has, because it's so difficult. I mean, you have employees. Since the reform happened, the guy is coming from Ajah to VI, and he's spending almost all his 50% of his earning on transport alone. So you understand? So this is, I'm not saying this to, I agree, we have to change things in this country. We can't continue doing it the other way, but we should also use human face and think about this. So I feel, forget whatever you charge the rich guys, but at this level, we need to look at that threshold and work on it. Thank you.
Sir. Okay, sir.
Thank you very much for that very elaborate question, and it's a very important point that you raised. So a few issues. The first one is the international poverty threshold. You know, most people don't interpret it correctly. As at the time the law was being signed, it was $2.15, and it wasn't market exchange rate, it's purchasing power parity. So which means if you convert it into Naira, it's far lower than the number you're referring to. But for Nigeria, and this is something we did for many aspects of the reform, we try to understand the international dimension, but we contextualize everything. There's the Living Standards Survey, which even the World Bank themselves admit that is more reflective of Nigerians' poverty threshold than the international one. And that's because, and I grew up in the village myself, is that some of our poorest people don't earn a lot of income, and they don't need to. When we were in the village, we produced the food that we ate. The house we live might be mud, but we were not paying rent. I can remember that if we enter, the kind of cars we enter is one that if it's moving, it's like generator, the noise and the smoke. If you enter it like once in a year, you are very excited that you enter the car because we trek to market, trek to school, trek to church and mosque. We were not entering all this on that this fuel. We didn't even know how much they were selling petrol. So you cannot go to those people and say you have not earned $3 a day. It will be out of context. So what we have done or what we did was to take Nigeria's context data, and that was what we analyzed. I agree with you that that amount is not enough, particularly for the urban poor. It's because of the urban poor that we introduced the rent relief of up to 500,000. Because that's the major distinction between the urban poor and the rural poor. The most vulnerable citizens you have are the urban poor. They pay rent. So because we don't want to discriminate between Nigerians, it will be unconstitutional. We left the 500 for everybody. People say, is it 500,000 they used to pay rent? We're not trying to pay rent for everybody. Oh. These were the people we're targeting. Now, having said that, why don't we make it higher? In a reform as complex as this, you have to manage stakeholders. That was the first lesson I learned on the job. Stakeholder management is critical. If you get states to disagree, you are not having a reform. Under the old law, we were taxing anybody that earned more than 30,000 naira a month, 360. This reform has moved it to about 1 million. 1 million is not enough, but it's far better than 360. Small businesses, after 25 million, you start paying taxes. This reform takes it to 100 million. Maybe it should be 1 billion. But 100 million is far better than 25. So, and I can give you this example. Big companies, corporate tax is 30, it's coming down to 25. Maybe it should be 15. But 25 is better than 30. It is progress. So if we allow this, because we also don't have a lot of data to convince our stakeholders. Remember the very first controversy was VAT sharing formula. We suffered on top. You don't know 1% of what we went through. And as we were so convinced that it was the right thing to do, we didn't have data. So at a point, you take a step back and say, well, if I'm the governor too, why should I just trust these people? They don't have data. So we say, maybe we'll start first. Now we have electronic invoicing, fiscalization. We're doing NIN harmonization, tax ID. And people think we are trying to tax them. They say they will debit. Nobody is debiting your bank account. We want to collect data so that we stop this thing that we do in the darkness and pray and fast that we just hit the answer. No, they don't run countries like that. So what if we try this for 1 year and we see the data at the end of the year? Whether I'm still there or not, I can tell you the institution will go back to the powers that be and say 800,000 naira taxable income at 0% does not make sense. Here is the data. Let it be 5 million. So my answer to you is simply, all your points are valid. But realistically, they could not have been done at this time. Whatever we have now in the new tax law is progress from where we're coming from, and it can only take us to even a better place going forward. Thank you.
Thank you, thank you, thank you, thank you. At least one more question, please. Okay, you, sir. But it's unfortunate the ladies are not asking questions. Okay, sorry, sir. Oh, thank you.
Good evening, everyone. My name is Norma Obona. I'm a journalist working with Business Day Media Limited. And my question is, how should Nigerians measure whether these reforms are actually working? Because you've said there are a lot of things. So we want to know, how should we measure? And then the second question is, if it fails, what are the systems that you've put in place to mitigate that failure? Thank you.
Thank you. Thank you so much.
How do we measure progress? Plenty ways of measuring progress, and which is why we want people to understand this so they can help us measure those progress together, because it's about us, not government versus the people. So one of it is we want to see an improvement in disposable income. By the end of this January, hopefully, if people don't sabotage themselves, because what will happen is, if I'm your payroll manager or your accountant and I don't like this government and their reform, I'll continue to tax you the same way we're doing it before. Whereas, if I just pay attention and update my payroll formula, by the end of January, you see 98% of workers will go back home with higher pay. That is results. Basic consumption, from food to education to health, transportation, and housing, remove the taxes already. Those ones will not happen immediately because people have inventory. Sometimes people will keep the benefit to themselves, but over time, I'll say before the end of Q1, within the first 3 months, we should start seeing those prices coming down. That's another result. Another result is investor confidence and investment, both foreign and domestic capital formation. So we're already speaking to organizations that are saying we're considering investing in Nigeria across different sectors. When you start seeing FDI numbers, you know those numbers are very embarrassing now. I mean FDI, not FPI. When you start seeing FDI, that's another result. So it's even security. You know, we have provisions in the law where there's this harmonized tax levy to give certainty to businesses, but also to fund critical areas of our lives, including security.
Okay.
NEL fund is one of it as well. You know, I was saying to a session, I can't remember which session I had today. I've had a number of them. That when I wanted to write my secondary school exam, we needed 495 naira. My family couldn't raise it. Okay, it was at ICANN. I was lucky to win one scholarship from my village people, 500 naira. You know, Taiwo is a twin, for those who know Yoruba. My twin sister, because my family couldn't even raise 500 naira. I won the scholarship, was the reason I wrote the exam, right? If not for that 500 naira, I may not be here in front of you today. If only there was NEL fund at that time, all of us would have gone to school. So, in this tax reform law as well, there is a dedicated source of funding to go to NEL fund so that we have equal opportunity to take a chance at life. And that changes everything. So, at the end of the day, I think my answer is still that this reform cannot fail. We don't have a scenario for when it fails. We only have scenario for how we make it better as we go along. And every time I sit down with Mr. President and I see the fact that he's the one taking the political risk, I'm the next person that takes the other risk, including people that are looking for death threats. They are looking for my address to come and beat up my family. That one is okay. After all, there are Nigerians who are soldiers fighting to protect the country and they die. Nobody even knows them. I can't die for Nigeria as a soldier. Maybe I should die for them as a reformer. You know, so I'm not afraid. I'm good. I'm cool. Mr. President is committed to it. People who don't want this reform are cooking off all man. You know the reason why some people think that someone like me is stubborn. Why are you not suspending it? We knew from when we were drafting the bills, they were already fighting it. And it was very easy to tell that if somebody does not like a section of tax reform laws, about 400 pages, their solution is go and withdraw the bills. Why are you not saying correct the section I don't like? It has happened at different stages. The latest one is the alteration. We know when they were hanging on to alteration, majority of Nigerians who said suspend it, they were saying it innocently. The people who started the conspiracy, they have a different motive. So we're not moved. We're interested in tell us the alteration when you find it. And when you find the alteration, how come the solution is not that anything that has been altered is null and void? Why is the solution is don't implement the reform? It's not adding up. So at the end of the day, I think we have to keep pressing forward. Nigerians have made the sacrifices for subsidy removal of subsidy on electricity, naira flotation, a lot of pain and sacrifice. This tax reform is coming in the middle of those reforms to help us accelerate how we transform those outcomes into our micro realities. We should not abort it. If you don't do it now, I can guarantee you it will not happen again, at least in my lifetime. Because before I jumped into this role in the public service, I'd spent more than 10 years in the private sector, almost working for government. National tax policy, all the finance acts. It was rocket science to get anything done. There was minimum tax that they used to charge businesses. They say you had not made enough profits or you made losses, they'll calculate a percentage of turnover and say you should pay it. COVID came, companies were struggling, they were still doing it. To get government to reduce it by half was rocket science. In this tax reform, it was piece of cake. We've done so many things that I've been trying to do before. To have a president who understands it and has the stubbornness to say, let's keep pushing forward, I don't think it's going to be easy to come by if we lose the opportunity now. And we also know that the closer you get to elections, the harder it is to implement anything. If these people had succeeded in suspending the implementation of this law, I can guarantee you it won't happen again. Because that in itself is an acceptance of guilt that this was a bad reform, even though it's not. How would you now reactivate it closer to the election? You will lose the election. So at the end of the day, I believe that God is working for us. That is why we managed to pull through despite the difficulties. And in my view, it can only get better. Thank you.
Thank you, thank you, thank you. It can only get better and better and better and better. We'll take that as our closing remark because there is no more time for us. Briefly, as part of our announcement, before we vacate this venue, there is a fresh refreshment. There is a fresh refreshment. There is a refreshment for us, and we have good people that will help us. And we'll go sequentially. We'll start with the panelists. Okay, before then. Okay, that is the turn. So there is a refreshment for us. And then we want to call on a very important person, the Managing Director of Cowry Finance Limited, in the person of Mr. Barnabas Okudibie, to give us closing remarks and vote of thanks. Thank you, sir.
Good evening, everyone. Distinguished guests, respected speakers, valued clients here, colleagues, ladies and gentlemen. As we draw this edition of the Cowry Quarterly Economic Discourse to a close, permit me to extend our sincere appreciation to everyone who made this conversation insightful, impactful, and memorable. You agree with me that we've learned a lot here, and it's been quite a wonderful time. First, I would like to especially thank distinguished speakers here for their time and depth of insight to the discussion here. Your contributions have helped us move beyond the headlines and to understand deeper what the forces that will be shaping the Nigeria economy in 2026. We want to say thank you for the teachings today, and we appreciate your time. We are particularly grateful to the clarity brought to the tax reform, capital markets, private sector confidence. The broader question we set to interrogate today, whether politics will ultimately trump economic reforms as Nigeria look ahead of 2026. These are not academic questions, they are real considerations, shaping decisions, investments, and livelihood. At Cowry, we believe the clarity creates confidence, and the confidence is essential for sound decision making. The Cowry Quarterly Economic Summit was established to consistently provide that clarity by conveying credible voices, encouraging informed dialogue, and keeping our stakeholders ahead of change. Today's discussion reinforces an important truth: while policies may evolve, political circles may shift. Informed capital, disciplined strategy, and long-term thinking will always remain relevant. On behalf of the board and management of Cowry Asset Management, we want to say thank you once again, and we trust your continued partnership. We look forward to welcoming you for further editions at Cowry Quarterly Economic Discourse. We hope to see you here again, and we believe that the next edition will be very impactful also, and we'll take lessons that would help our businesses, help us as Nigerians to prepare for 2026 and run the year better. Thank you very much. Thank you for your time, and thank you for believing in us.
Thank you let's take a group photograph.